Welcome back everyone. Today we are doing a full deep dive into XRP, and I promise you by the end of this video you will understand exactly what is happening with this coin, why the price is doing what it's doing, and what the future actually looks like. We are going to cover everything: the current price situation, the technical analysis, the institutional moves, the regulatory battle, Ripple's massive acquisitions, the SRPL upgrades, and the long-term price targets. So grab a coffee, sit back, and let's get into it. Let's start with the elephant in the room: the price. XRP has broken below the long-defended $1.3 support level, and this move came with heavy volume, which means it is a serious and meaningful shift in short-term market sentiment. The sharpest selling came during the May 27th session, when 64 million XRP traded hands as price broke below the $1.315 support zone. Right now, the RSI is sitting around 43, which signals weakening momentum, but XRP is not yet in oversold territory. XRP is trading below the 20, 50, 100, and 200-day EMAs, all of them, which tells us there is continued short-term weakness unless buyers step in and reclaim the $1.41 to $1.48 resistance zone. Analysts are warning that XRP is hovering near the lower edge of a long-running symmetrical triangle, and if $1.3 is not reclaimed, there is a real risk of a deeper drop toward the mid-120s or even $1.1. So yes, the short-term picture is not pretty, and I am not going to sugarcoat it for you. But here is the thing: price action alone does not tell the full story of XRP in 2026, and that is exactly why we need to go deeper. This is the question everyone is asking: how can XRP be dropping while all the news seems positive? Most cryptocurrencies celebrate a major legal victory by rallying hard and never looking back, but XRP defied that script entirely. After Ripple won its 5-year battle with the SEC in August 2025 and spot ETFs launched in November, the token actually dropped from $3 to roughly $1.4, even while institutional inflows exceeded $1.44 billion. So what is going on? Why is price falling even when institutions are buying? Ripple CTO David Schwartz has framed the real barrier clearly: the main obstacle is not regulatory clarity itself but asset volatility. Banks want a high and stable XRP price, not a volatile one. And there is another key issue: roughly 60% of RippleNet's 300 banking partners currently use Ripple's messaging rails without actually touching XRP at all. That means Ripple is growing as a company, but XRP as an asset is not yet getting the full demand benefit from that growth. Understanding this disconnect is the key to not panic selling and also to making smart decisions about this asset going forward. Now let's talk about what is actually happening behind the scenes, because the institutional story is genuinely massive. For years, institutional interest in XRP was expressed through OTC desks and private placements, that quiet conviction that rarely makes headlines. That chapter is now over. 5 spot XRP ETFs are now trading in the US, with cumulative inflows of $1.53 billion since their November 2025 launch. Goldman Sachs has allocated nearly $154 million to XRP ETFs at precisely the moment the network is processing record transaction volumes. And just last week, on May 29, 2026, XRP ETFs actually saw inflows, while major Bitcoin and Ethereum ETFs faced heavy redemptions. Think about what that means: when institutions were pulling money out of Bitcoin and Ethereum, they were putting it into XRP. That is a massive signal of confidence. Exchange-held XRP balances have plummeted to 7-year lows of 1.6 billion tokens by January 2026, as ETF custodians locked up supply in regulated structures. Less supply on exchanges, combined with growing institutional demand, that is the classic setup for a major price move. The only question is when. Major banks including Binary Mellon, Fidelity, and Citi are already positioning around XRP and RLUSD ahead of full regulatory clarity. This is not retail hype, these are trillion-dollar institutions making strategic bets on XRP's future. Now let's talk about what Ripple the company has been doing, because this is where it gets really interesting. In 2025, Ripple made 3 massive acquisitions totaling $2.45 billion: Hidden Road for $1.25 billion, Rail for $200 million, and Treasury for $1 billion. These deals represent the largest M&A activity by any crypto company to date, and each one was built to move institutional money through Ripple's ecosystem. Let's break these down one by one. First, Hidden Road, now rebranded as Ripple Prime. This acquisition makes Ripple the first crypto firm to operate a global multi-asset prime brokerage, giving it financing infrastructure that traditional finance has relied on for decades. In April 2026, Ripple Prime received a BBB investment grade rating from Kroll, opening the door for pension funds, banks, and insurance companies to work with the platform. No other crypto-affiliated prime broker currently has this rating. Ripple Prime also joined the DTC's NCC participant directory on March 2, 2026, placing XRP-linked infrastructure inside the clearing rails that handle trillions in daily settlement volume. That is enormous. DTC processes over $3.7 quadrillion in transactions annually, and now Ripple is inside that system. Second, Treasury. This acquisition opens Ripple's access to the $120 trillion-plus corporate treasury market, allowing Fortune 500 CFOs to manage stablecoins, tokenized deposits, and digital assets alongside traditional treasury functions. Third, Rail, the stablecoin payments company, which connects directly to Ripple's RLUSD stablecoin strategy. Analysts now label Ripple as the banker's bank, capitalizing on traditional banks' inability to develop blockchain solutions in-house. Now, RLUSD deserves its own focus because it is becoming one of the most important pieces of Ripple's entire ecosystem. RLUSD stablecoin has reached approximately $1.3 billion in market cap and has already expanded to Ethereum Layer 2 networks. RLUSD is approved as margin collateral on OX across over 280 trading pairs, and Ripple Prime institutional traders can now trade Bitcoin options using RLUSD as collateral. Deutsche Bank has integrated Ripple's payment infrastructure, and SPY Holdings rolled out RLUSD in Japan in Q1 2026. Through the tokenization platform Securitize, RLUSD serves as a settlement layer for BlackRock's Biddle Fund and Von Exville tokenized funds, enabling holders to swap fund shares for RLUSD on demand, creating a 24/7 stablecoin off-ramp for tokenized treasuries. BlackRock, VanEck, Deutsche Bank, SPY Holdings. This is not a small project anymore. Now let's talk about the single biggest regulatory catalyst for XRP in 2026, the Clarity Act. The Senate Banking Committee voted 15-9 to advance the Clarity Act on May 14, 2026, providing the strongest legislative signal in years that XRP will be formally classified as a non-security. This is the most important near-term catalyst for XRP because it would remove the regulatory overhang that has been suppressing institutional adoption for years. If it passes, XRP would be classified as a digital commodity, which would greenlight U.S. banks for on-demand liquidity adoption and open the floodgates for even more ETF products. Experts warn that if the Clarity Act does not clear before midterm election season, the window could close because passing legislation gets much harder once the political cycle takes over. So the next few months are absolutely critical for XRP's regulatory future. Standard Chartered has set a price target of $8 for XRP by year-end 2026, but only if the Clarity Act passes, the full Senate and ETF inflows reach $10 billion. While all this financial and regulatory action is happening, the actual technology behind XRP, the XRP ledger, is also getting major upgrades. Daily transactions on the SRPL hit 3 million on March 15, 2026, a threefold increase from mid-2025 averages driven by growth in AM pools, tokenized assets, and RLUSD-denominated settlement flows. SRPL 3.2.0, the latest security release, is now live, strengthening network resilience with critical bug fixes and security hardening. A major new DeFi upgrade proposal was put forward on May 29, 2026, a draft plan that aims to add new liquidity models and boost capital efficiency across the entire network. A native lending framework has been introduced under the XLS66 proposal, designed specifically for regulated institutions, enabling them to lend, borrow, and generate yield within a compliant blockchain environment. Zero-knowledge proofs are also being integrated into the SRPL, enabling privacy-preserving transactions while maintaining full transparency for regulators. This is a balancing act that is absolutely essential for institutional trust. And perhaps most impressively, JPMorgan, MasterCard, Ondo Finance, and Ripple completed the first-ever cross-border tokenized US Treasury redemption on SRPL, clearing in under 5 seconds. 5 seconds to settle a cross-border institutional trade. That is the power of the XRP ledger. Alright, let's talk about the numbers everyone wants to hear. What do analysts actually think XRP is worth long-term? Standard Chartered's roadmap projects $7 in 2027, $12.6 in 2028, $19.6 in 2029, and $28 by 2030, but this roadmap requires the Clarity Act to pass and ETF inflows to scale past $4 billion. Bitwise projects new all-time highs for XRP within the next 12 to 18 months. Long-term projections remain constructive, with XRP still capable of revisiting the $2.2 to $2.8 range even in the more conservative scenario if adoption, institutional demand, and regulatory clarity strengthen over time. But let's be real, these are projections, not guarantees, and the difference between the bull and bear case comes down to a few key factors. XRP's future after 2026 depends on whether the Clarity Act passes, whether payment corridors continue to convert, whether tokenized asset growth continues, and whether ETF inflows compound year over year. So let's bring it all together. Short-term XRP is under pressure. It has broken below $1.3. Bearish momentum is real, and we could see further downside before any recovery. Medium-term, the Clarity Act vote is the single most important event to watch. If it passes, the entire regulatory narrative flips in XRP's favor almost overnight. Long-term, the fundamentals are arguably the strongest they have ever been. Institutional adoption, record SRPL transaction volumes, billion-dollar acquisitions, BlackRock, Goldman Sachs, Deutsche Bank. This is not a meme coin. This is financial infrastructure. The big disconnect right now is between what Ripple as a company is building and what the XRP token price is doing, but historically, price always catches up to fundamentals eventually. The key question is, are you willing to be patient enough to wait for that moment? Do your own research, manage your risk, never invest more than you can afford to lose, and if you found this video helpful, smash that like button, subscribe to the channel, and I will see you in the next one.